coming out of a long weekend, and you wish it was not a long weekend for once.
I hope today we'll gain.
I hope so. And we make up for all those gains that world markets have been seeing.
The world is not looking like a bad place to be in, Aisha. Yeah. And especially in that, India seems to be really enjoying a pedestal positioning. So if you're walking into trade this morning, good morning firstly, but it is looking like that sense has prevailed, and logic is what is now governing the US administration when it comes to implementation of tariff. And markets, in a sense, were quick to realize that there is change in how the tariff war would move, and that, in a sense, is really ensuring that Wall Street, they had a strong close on Friday, they had a good close on Monday, and we have a decent handover at least this Tuesday morning. But interestingly, for us, Aisha, what is important is that while we were away on Monday, US markets and GIFT Nifty rallied, which means today we are in for a monster gap up start. And when you are in for a monster gap up start, which is supported by the set of global cues we are working with, it really could be short covering. I mean, I love the word short covering. Yeah. Short covering means the bears are running for cover. So I think short covering really could be the dominant mood for Indian market purse. And just think about it. If you add what implied GIFT Nifty is indicating, you actually have gone back to March end levels. Kahe ka tariff? Yeah. I mean, so all the hullabaloo about tariff which was at play, Indian markets have completely shrugged it off.
Yeah, absolutely. Although on 2nd April, when the tariff announcements came in, the Nifty level was about 23,332, and April 11th, that's last week, we closed in at 22,822. So we have lost about 500 points. But yeah, today's gap up, who knows, we may make up for those 500 points lost in this week alone. But I think the key is really what's happening with the bond markets and what they are penciling in right now. The yields have risen, and they clearly seem to be factoring in still a lot of uncertainty around the tariffs, aside of course, bigger macro concerns like stagflation and inflation both.
Aisha, look, I don't think we can safely say that, okay, equities or global equity markets have stopped falling, but bond markets and currency market is where I think the pivot has moved. The bond markets are confused whether it is inflation which is going to be hitting the world next, or it's going to be genuine fear of a recession, which could be because of what is happening in terms of the tariff imposition. So that, in a sense, is creating confusion. Also, US bond markets have been very strict in indicating that, look, there is a challenge if US economy slows down and inflation comes back. And the second, I think, is currency, where you can look at the trajectory of what every major country is trying to do. China is weakening the currency. US administration want the dollar to remain weak. India or RBI is no longer actively moving back into the currency market. So I think the interplay now of asset classes, first was equities. Now I think it's going to be bond. And the third layer or the third leg of this entire picture really could be how the currency market would evolve. So for me, rather than looking at CBOE, VIX or NASDAQ to judge what the mood of the world is, I think we should really be looking at the bond market and the currency market. But I want to go back to that point on India once again. Where is the GIFT Nifty first? Let's look at the implied Nifty. Forget GIFT Nifty. Implied GIFT Nifty. We are in for a 388 point, should be more actually, 388 point gap up start. We will start a good 400 points above where the Friday close was, and psychologically you start above 2300. Now let's superimpose this with the chart for the month of April, only April. Tariffs came on play from 2nd of April. Where do we stand there? Let's look at it, please. Just come up on your screen. While Rajiv Agrawal is also ready. I'll just connect with him. There you go. You add that 500 points up, that's about 400 points. That means you've just not seen any impact of the tariff. While we are talking about it, while everybody is mentioning it, while it is something which is occupying everyone's attention, so to speak. Nifty per se, if it is a gap up start, what implied GIFT Nifty is indicating, we could remain completely unaffected.
If you like this video, then like, share and subscribe to ET Now.